And we're looking at a live shot here of the beautiful city of Toronto. Spectacular. And it really is amazing. Big city. Anyway, here we are, back to Midas Letter Live. I'm Ed Milewski. Former guest co-host Steve Misener is back in town. Hey Steve, how you doing?
I'm good, Ed.
Good. Here we are. Another episode.
Live at Bay and King.
Bay and King. Spectacular. Okay. So lots to talk about today. We're going to go right to Ricky Gerwitz with the news of the day. There's too much going on here.
Thanks. And here are your headlines. Origin House Corp released their third quarter financial results. Highlights include a record Q3 revenue of $6.6 million, a growth of 89% over Q2 2018 and 790% over Q3 2017. The acquisition of RVR Distribution, including 5 licensed distribution and manufacturing facilities across California, advanced acquisition of 180 Smoke to provide California brand partners with rapid access to the Canadian market, and they closed the acquisition of the premium Sonoma County craft cannabis producer FloraCal Farms. Aurora Cannabis Inc. announced today that the company, through a selling broker, has completed the sale in the open market of the Australis Capital Inc. units on behalf of non-resident shareholders. Payment of the net cash proceeds from the sales of Australis units to the non-resident shareholders of record as of August 24, 2018 was completed by the custodian on November 27, 2018. In total, 11,222,349 units of Australis were sold in the public markets. Cure Partners Inc. announced that it has completed a private placement funding round of approximately $75 million. The company also completed a $45 million private placement in July of 2018. MJardin Group reported their third quarter financial results. Highlights include a revenue increase of 65.1% to $7 million compared to the prior year of $4.3 million. They also completed the Cheyenne acquisition, establishing MJardin as a principal operator in Nevada, completed an investment into DNA Genetics, providing an entry into the California market and expansion in the European region with a leading cannabis brand. And they announced the pending acquisition of GrowForce Holdings. Emerald Health Therapeutics, Inc. announced today that Dr. Avtar Dhillon, Executive Chairman, has been appointed President of Emerald and that Chris Wagner has stepped down as CEO. Dr. Dhillon is a life sciences entrepreneur with more than 35 years of experience. He is also the CEO of Emerald Health Sciences, which is a major shareholder of the company. He is chairman of the Cannabis Canada Council, and as a founder and co-founder of many life sciences companies, he has raised more than $1 billion in public and private financings. And that's your news for today.
Well, thank you, Ricky, for the news. Lots going on. Still a lot of earnings coming out on a regular basis. We just saw Origin House put up numbers, and I see the stock is down about 40 cents. At least that's when I just looked at it. I'll put up the chart. So it's still, they're still spending a lot of money, right?
Well, I mean, the revenues are up, and I think people will focus on the top line right now. It takes a while in an evolving industry, especially a new one, to get to the more mature level of free cash flow and EBITDAs and dividends. I mean, that's the life cycle of a stock from the industry and a stock from the beginning to the end. So the top line issues will be the key focus, not whether there's green or red on the bottom line, because the money is being plowed back into a high growth business and an industry, and that's pretty much key across the board. So as long as those quarter to quarter and year over year numbers keep showing very strong growth, that's what investors will really focus upon.
Yeah. And the bigger markets today are flying.
Yeah.
I wonder if the world's starting to think that they're getting closer to doing something with China. You think that's at the...
Well, the G20 meeting is on November 30th. I mean, the big focus will probably be whether China and the U.S. manage to get to wind down some of the trade friction and some of the hostility, or at least the apparent infighting about trade, and if there's some warmth there and some more common ground and some more gentlemanly behavior, I think that could be constructive for global stock markets.
Yeah.
And I think that will be a big focus for later this week.
I saw a news item today that Trump tweeted something to the effect that the Fed problem is a bigger issue than the China trade thing. He actually said, you know, the Fed could be more harmful by raising rates. So he's on them, like he's...
Every president has always complained about the Fed.
Yeah.
I mean, that's just a natural sport.
And this guy's a new guy, though, right? This Powell, what is it? Powell is his name?
Yeah, I think so. But every president complains about the Fed. Rates are always too high under any president, so there's nothing unusual about President Trump complaining about the Fed. And the Fed has two arrows in their quiver. Any central bank has two arrows in their quiver to fight an overheated economy. They can tell people they're going to raise rates and try and scare them. Remember, Greenspan in the tech bubble back in 2000 talked about irrational exuberance, trying to talk down the crazy tech market of 18 years ago, a long time ago. And then eventually, if the talking points don't work, the verbal arrows, then they have to use the hammer, the sledgehammer, the Thor hammer, which is actually raising rates.
Right.
And they do that, and then they tell people some more that they might raise rates. And against that backdrop, you have, you know, how is the market reacting to the talk? I think what's key now, though, is that because the stock market has been very volatile, it shaved 2,000 points off the Dow from peak to trough, from mid 26,300 down to 24 and change. That's 2,000 point drop. That's almost a technical bear market. But against that, we've had a huge recovery. We've recovered over half of that now. But does that affect consumer confidence? Does that kind of shock? Because people are confident when they feel wealthy. They're confident when they feel comfortable about their jobs and their mortgages and their cash and their savings. So when you have gyrations like this, it freaks out individuals. Does that start to show up in consumer confidence? And thus, does the Fed need to maybe not need to raise rates as aggressively as possible than they did? And that could be positive for stocks and bonds.
When you have you know, Amazon and Apple giving back, you know, 15, 20, 25% each, there's such big market caps, the wealth effect in reverse, right? You know, it makes people say, hey, you know, maybe we're not spending so much at Christmas. I don't know, but you know, certainly if stocks start to drive, it can bring on a recession.
Well, the biggest sell-offs have certainly been in the highest growth sectors. They're the ones trading at the highest price earnings, the PE ratios. Yeah. They're the ones that indeed are the biggest companies in many cases, and they've been the big winners. So it's natural. They're less supported by dividends, or not at all, and they're not supported by lower price to books and traditional value measures. So the financials, the high growth sector, Silicon Valley type growth names, and also the commodities, which have, you know, been suffering their own troubles.
Except
oil,
except for natural gas.
Oil, particularly.
Yeah, oil. How do you explain a 1/3 drop in oil in a month?
We've had 7 weeks of WTI West Texas down, 7 weeks in a row. We're into the 8th week now. Yeah. It's hovering just above 50. We'll see whether it's found a bottom here. Yeah. There's technically on the chart, and I know you love to look at the charts for trends and for support. The chart looks like weak support at 50. We're above that. And then it looks like solid support at 44, but God forbid if we go down there, that's another 12 points, 12% down from where we are, 13% from where we are. But the commodity pressure is across the board. You know, coal, copper, lumber, really iron ore. I mean, it's really, you know. But we're also at a time where the U.S. dollar's been strong, and against that, we're heading into a usually more favorable season for commodity prices, which is the winter. A lot of new inventory gets picked up and built up in the new year. A lot of companies run their inventories down for the year-end snapshot of the balance sheet. They don't want to carry too much raw material. They want to show more liquidity. So a lot of new orders for commodity deliveries coming in the first quarter.
Yeah, never a dull moment. We're going to switch gears here. Earlier, Brandon Colwell from Follow the Money spoke to Tim Froude, CEO of Sokoman Iron. Here is that interview.
And we're joined in today for a second or third time now.
Third time, actually.
Third time.
Yes,
Tim Froude, CEO of Sokoman. Welcome.
Thank you for having me, Brendan.
Absolutely. So a lot has been going on over the summer. Obviously, that's the main drilling time. Can you have an update for shareholders?
Yeah, well, we're in the midst of phase 2. Obviously, we had a very successful phase 1 with a significant discovery hole at 1801, and we're trying our best to finish the 10,000 meters that we proposed for phase 2. I think it'll be a little tough to get that done within the calendar year, given that the lab will shut down before that, and we want to make sure that we've got everything that we possibly can that's going to be sampled and assayed in the lab. But we've got about 25 holes finished right now, and over 1,000 samples waiting for results to come back. And that doesn't count, obviously, what we've already released. So it's going to be a busy time, and we hope to have at least one news release prior to everything shutting down for the Christmas period.
Yeah, and we were talking just before we went live with this. We were talking about the fact I had asked, "Are you still drilling?" And because being in Newfoundland and obviously not being in the mountains in Yukon and upper BC, you're able to still be drilling at this point where many other people are starting to shut down.
Absolutely. I mean, the holiday period obviously is a time when everybody basically shuts down for a few weeks, and we're no exception. But you're correct. Logistically, Moosehead is a dream. It's the Trans-Canada Highway cuts through the northern part of it. We've got lots of access internally from old drill roads and old logging roads, and winters aren't what they used to be. So we'll be able to drill well into December, and at that point shut down, try and get everything we can get as possible into the lab for assay, and and then look to a January startup. Once there's sufficient ice conditions to basically start phase 3, because that'll be a strong component moving forward. Given that the eastern trend actually sits largely beneath a small lake that would provide excellent access from drilling it from above, which is now basically where the focus will be for the eastern trend moving forward.
No, you're talking about phase 3, but recently, over the last few days, I believe it was actually, phase 2 just came out, and we were going through some drill results there. Are you able to speak about that? Are you excited about it? Does it change your game plan?
Well, actually, all of the above. Phase 2, we started with a pretty good hole, actually 24.9 meters, I believe, at 33 grams, which was a really good follow-up to 1801. We're starting to get a better picture now of the structure, and actually the model that we were thinking was in play for the mineralization in the eastern trend has actually changed to the point where now it's become clear to us that the body of rock that's mineralized is actually dipping in a different direction than we had anticipated after we drilled 1801, to the point where, as I mentioned earlier, phase 3 will now be focused. Basically, it's going to be an ice platform-based program to test what looks to be a more flatter dipping north trending zone more effectively and more cost effectively from the lake. So and we're still formulating that plan. We don't have a fixed number of meters, but phase 3, if you want to call it that, will include whatever we don't get drilled in the 10,000 meters as proposed in phase 2. It doesn't look like we're going to get 10,000 meters, but that's fine. We're funded for that. So we'll add that meterage onto whatever we determine to be appropriate for phase 3, and looking forward to a startup, hopefully, in late January, after we get all the results back. Permits, of course, we're permitting drilling on the ice, so that'll take a little bit longer. And with the Christmas period, everything just kind of slows down a little bit. But we're really excited about phase 3. It's like we're getting more excited for each progressive phase, which I guess is a good thing.
Yeah, and that's interesting. So you will be continuing drilling throughout the year. Obviously, Christmas break, as you said, everyone's the family. You take a little bit of a break. The labs are down and all of that as well.
Yeah.
But you will be drilling in January moving forward. Was that always the plan of going all year round, or is it because of this new area that you're going into gives you a new advantage of being able to drill, or was that the game plan the entire time?
No, and again, I'll speak to the logistics of the property. I mean, you can pretty well drill year round. Obviously, there are periods when, like spring breakup is probably the worst time, and the longest period of time when drilling is not really effective based on just the conditions for the roads and things. And but in the Christmas period as well is another time. But it was always our plan basically to just keep building on the results. Keep moving ahead, keep hitting the zones, and as well we still have in addition to the eastern trend, the high grade at the eastern trend, we still have lots of isolated other targets that still require testing, and will be part of phase 3 moving forward as well.
Very nice. Now let's switch gears more so to the stock market. The stock market for mining has been rather bleak in a sense that we're having news come out for different companies, and there doesn't seem to really be any legs in there. I believe the day of the news release, you guys had record volume. Actually, I could stand corrected, but I believe that was the most volume your stock has seen since its inception. But it was also a sell-off from that. Do you know what are the different reasons why that would happen, or is it an industry-wide thing? What are your thoughts on that?
Well, yeah, it's a bit frustrating, especially if you're a shareholder, and you bought, at or around the time of of the release of the first phase of results. I mean, we had some pretty incredible trading days, north of 20 million shares on multiple days, which is quite remarkable. I guess if you're looking to get in and get out of a stock quickly, I guess it's your treat. But I don't know. I mean, I guess we're luckier than a lot of companies in that we are we are a liquid stock, I guess, and we don't trade by appointment. I can't really explain why the stock is sitting back at its current levels, other than just a general malaise. I mean, even locally back home, I mean, we have a very good growing resource, Marathon Gold. 4 million ounces, and they're 60 odd cents. I mean, it's I don't know what they are today, but severely undervalued. But I mean, when you see instances like that, I guess you just have to say, well, it's just the way things are in the market these days, and we just have to do our job, basically. We're financed. We're going to move forward, keep producing results, keep moving the pegs further, and at some point, the stock hopefully will realize its potential.
Yeah, and again, I do see a broader pattern, especially across the mining stocks throughout this fall. And not many have gained traction. When they did, they were traded. They weren't invested, and you could really see that right across the board. With your specific stock, when it comes to different options and different warrants that are out there, were there any that were in the money before and that was possibly into this as well, or do you have much more still outstanding, or are you ready for the next level?
Good question. Yeah, we did see the exercise of somewhere between 13 and 14 million warrants after the first run-up, which brought a nice chunk of money, over 800,000 in fact, to our treasury. There's still about that many left at prices between 5 and 9 cents that are still out there. We've seen a couple of small exercises, but certainly nothing to explain that there's cheap paper, suddenly flooding on the market. And I would assume the ones that were exercised have been traded already. So, but like I said, we've always been a very liquid stock. Like I said, which I guess is good in some respects. And if you're a trader, it's probably ideal. And maybe that's what's happening, right?
Yeah, traders have really so just being in our different community and chat rooms and just watching and talking to a lot of people who are traders, they've traded the mining stocks very, very well. So it's perfect for a trader's world, but you also want to be able to have a world where investors get a little bit from there as well. And I think right now there's a lot of concerns in North America. It's market-wise. It's not just your company, it's not just gold, it's not just mining. I think it's very broad right now. A lot of people are really trying to find, okay, when are things going to find their footing in the markets? But It never lasts, though.
No.
It's called a cycle for a reason. You have your peaks and you have your troughs. A lot of people do believe right now that gold and mining stocks and exploration are in a trough. And we're waiting to see when that, what's going to ignite it.
Well, I think I was speaking with that on that topic, very topic this morning with some people, and basically interest rates, have to start to come down. I think that's been demonstrated over the years that, with flatter interest rates, it's more attractive for gold. And obviously the U.S. dollar has a very big role to play. So, there are several factors at it, but, the investment community has changed drastically, in the past, even recent, like 5 or 10 years, in terms of, the mom and pops that were out there and that used to drive the junior market. They just don't seem to be there anymore. It's all largely block trades and stuff that, we can't control. And people are trading for a penny or 2 pennies, and if you do that several times a day, and you can make a few $1,000, sitting at home on your couch. I guess, that's what you're going to do, and but at some point, the story will get out, and obviously the next level for us is to attract, the attention of maybe some bigger companies, and move the stock forward, with support from strong hands in the industry.
Mm-hmm. Yeah, and you'll need that, and I'm sure that they're starting to look at. I speak to people all the time with their different investments, and they're definitely looking at mining stocks and different gold plays and all that, and preparing an entry. But it seems to be the consensus that that preparation is still preparation. They're still really waiting to see what the market will do. But it sounds like you've got a couple holes still to come out. Assays, as you said earlier, hopefully before Christmas break. Before the labs go on there. I think you said a 2-week break?
Yeah, they're closed for the whole Christmas period, starting around the 20th of December through to the New Year's. So, yeah, we want to make sure we've got as much as we can, in the system prior to that, and then hopefully within a couple of weeks of that after Christmas, we'll be, either in receipt of all of our results, or certainly the ones that are critical to, to interpreting the story, and start as soon as permits and ice conditions allow. Yeah, we're looking. It's going to be a great third program. I'm really excited about it.
Well, absolutely, Willie. I appreciate the time coming on the show. I appreciate you coming on, obviously, the investors that are in your company, but also people who may not have heard you before, being able to find out a little bit more about you. So always appreciative of your time, and look forward to having you again on here in the near future.
Thanks, Brendan.
Absolutely.
Yeah, always interested in hearing about these junior explorers. Yeah, Sokoman is on the East Coast, and they found some pretty good indications of gold, but this has been a brutal market for explorers, and you got to keep raising money, and then there's the dilution factor, of course, but we wish the best to.
Yeah, but they've been they're doing a nice job, and I mean it's kind of exciting to find some gold when you're known more as an iron player.
Exactly.
I mean that's pretty exciting stuff,
and,
really.
And high grade stuff too. And high grade stuff. I think some pretty big guys in Toronto here put some money in. And I remember he had a little show and tell, and I asked him when was the last time he had this much cash, and he sort of chuckled and said, "We've never had this much cash."
Yeah, I mean, in Newfoundland, Labrador area, that East Coast is a very favorable mining regime as well.
Yeah, for sure. Yeah, so commodity prices, I just noted that oil close to $50, 50 and a quarter live. Yeah, I don't know what to make of that. I don't know, how often do you see a commodity drop a third in a very short period of time when supposedly things are going reasonably well? Can't help but wonder if it's got something to do with that Khashoggi being.
No, I don't think so. I mean, there is some.
You don't think?
Well, there's some theories about that U.S. is flooding it to punish Saudi Arabia, but I don't. I mean, I'm not an expert. There are people who follow that market much closer. But no, I think it's partly because there's lots of oil. That's pretty obvious. And we're in the seasonal dip too, in the U.S. and other countries, but mostly North America. The driving season's in the summer, where you get a lot of gasoline consumption, and then the heating season. There's still a lot of heating oil at play in the U.S. That's in the winter, and in the fall you get the shutdown, where the refineries have to reconfigure and do their maintenance and switch over from taking a barrel of oil and crude and turning it more into gasoline in the spring for the summer season, and in the fall they switch the formula and the calculations to make more heating oil and less gasoline.
Yeah.
So that shutdown in October, November, while they tweak it, tends to cause a little bit of indigestion in the oil market. A cold winter and a full winter, don't shoot the messenger, but it's possible. Some forecasts say it is. That's going to be firmer for oil.
Interesting. Interesting.
It's a seasonal play here as well.
This U.S. market's on fire today.
Yeah.
And we saw, big drops a few weeks ago, but nice to see a reversal. The marijuana stocks are doing well. So what do you think the temperature, the barometer is for consumers in North America?
Well, I think the consumer confidence numbers are interesting because if as we were saying before the break, that if there is some concern, at least short term, from this volatility in the stock market and consumers pull back a little, although everything about Black Friday and Cyber Monday, it's interesting how that Black Friday has now basically become a retailing phenomenon around the world, even though it's really solely based on the Friday after American Thanksgiving.
I got some good sales downstairs.
Sure.
Black Friday, I thought it was an American phenomenon.
No, but it's rolled out into Europe, around the world,
right.
And now we've got Cyber Monday. So I mean, really, there's no American Thanksgiving elsewhere in the world, but in terms of timing,
sure.
But it's interesting. Retailers will take the lead to kickstart Christmas. So the numbers were good.
The numbers were good.
If there is a sentiment, because when the Fed is acting on rates, it's always forward-looking. So if there's any change in the sentiment indicators about consumer confidence, then that's both a positive and negative. It's negative from a future spending perspective, but it also could lead to less likelihood and sentiment that the Fed has to be that hawkish and that aggressive on rates. And that would be better for the bond market and better for the stock market. Interesting to know just a few kind of high-end luxury good stocks that have fallen out of favor lately. Harley Davidson.
Yeah.
You're buying a Harley when you're feeling good.
Yeah.
Maybe when you have a midlife crisis, but and Tiffany's.
I saw. Yeah, I know that they took a bit of a beating, didn't they?
And Sotheby's, obviously high-end stuff. So high-end, very discretionary luxury goods. People keeping an eye on those, not just watching the Walmarts of the world, which is having a good day today, to look for consumer sentiment, but also watch the luxury goods stocks as well.
We're gonna switch gears again and talk to Alan Brochstein from Texas, Houston, Texas. He's from 420 Investor. He's been on our show a lot. Let's have a live interview with Alan.
Hey, Ed.
Alan, are you with us? There you are.
I'm with you. Can you hear me?
Yeah. There you are. Yeah. It's Steve Misener, Alan Brochstein, Ed Milewski.
Hey, Steve. Good to see you again.
We met via video conference with James back in June, I believe it was, and fellow CFA, if I recall.
What's your?
That's right.
What catches your fancy these days? What are you following closely? Markets are strong in the U.S. today.
I follow the whole market closely, and I'm watching it drop. It's getting kind of painful, but I've had a pretty good year. Not as good as it could have been, but model portfolios are all up. But it's been a tough year for the market, starting from the very beginning of the year when we were surprised by Jeff Sessions, and then obviously just a lot of summer doldrums until mid-August when Constellation bailed us out again, and since then it's been interesting. The big story this year, of course, has been all of a sudden people care about U.S. cannabis companies, which I've been waiting a long time for that. But these days, nobody seems to care much about anything.
What's your favorite U.S. cannabis company?
Well, I don't know if I have a favorite one, and I like to disclose if they're a client for sure. So, and I do work with Kush. It used to be Kush Bottles. It's KushCo now, and I've talked to James about it in the past. They reported this week. One of the things I key on is revenue, and very impressive. We're not only Kush, but we're seeing other companies produce high revenue and give very strong and high level of revenue guidance a year out, and they did that. One of the reasons I'm getting more interested in them, listening to the call, they are doing more and more business with the large consolidators in the United States, and that's a big story right now. We're starting to see a lot more companies go public, buy up other companies, get bigger, and it appears that Kush is working with these. And if you're not familiar with Kush, they have 5 different lines of ancillary business that they're doing. So they're working with cultivators, processors, and even retailers to help them run their businesses better. And so it's kind of, we don't really have a ETF here in the United States. I hear there's one coming. But in some ways, you get that ETF type of effect because they're working with so much of the industry. I think they said they had 18 customers last year, maybe it was 14, that had $500,000 a year of business with them or more. But it's an interesting company, and the stock has had a good year in a tough market, which is always nice to see.
I think that Alan, I think that point you raise about the multi-customer, multi-jurisdictional investment opportunity in lieu of an ETF, I think that has appealed to a certain group of investors where they maybe can't quite sort out exactly which part of the market that they want to be upstream or downstream, and it's a fast-moving sector, and it's so new. There are and state by state, there's so many different rules of participation between med and recreational and levels of maturity in those markets, that the ability for an investor to get one footprint, one buy, and say, well, this is one of the horses I'm going to take a piece of, and because I'm betting on sharp management and they will enter these markets, and I get a kind of a wide spectrum of participation with one investment. I think that theme seems to be evolving.
I think you make a great point. I mean, I follow this full time, and we're starting to see different types of companies. I've watched the Canadian LPs for since 14 really, and we've seen a few emerge, but they all have pretty much the same approach for the most part. They're not too worried about cash flow generation. They're building an empire. And here in the United States, we're seeing a lot of that as well. And, you build an empire, you try to, and maybe you fail. So we're seeing some very aggressive companies. At the same time, it's kind of interesting because we're starting to see some more conservative type companies. There's a company, TrueLeave, out of just Florida right now, believe it or not, that is doing more revenue than Canopy Growth or Aurora. I was going to say combined, and that won't be forever because those companies are going to see their revenues ramp up this quarter that we're in right now. But just in the state of Florida, one company, and they actually are generating positive cash flow, positive net income, very different from the approach that some of the larger Canadian LPs have taken, as well as many of the leading U.S. operators. So I do kind of like that idea of whether or not you're going to buy one company that's serving all these, or just the idea of, I tell my subscribers at 420 Investors, I'm not a big fan of the build an empire approach, but I get it and it can work. So have a couple of those, but maybe people should be focusing on the companies that are a little bit more fiscally prudent, treat capital a little bit more preciously.
Any thoughts on when you're going to be legal federally in your great country?
Well, I think that look, from a social justice aspect, we all want that today or yesterday. The really not well kept secret is most of these operators don't want that to happen anytime soon, and the states don't want it to happen anytime soon. They have a lot of tax revenue, so it's kind of, and even the federal government, because they're getting this 280E taxation, which is just ridiculous. So it kind of seems like status quo is going to be around for a while, whether or not that's positive or negative. The good thing for that is it allows a lot of these multi-state operators to build their businesses. The barriers to entry are kind of high because of regulatory compliance and on a state-by-state level, and a lot of people get scared off because of federal illegality. So I don't think that investors need to consider legalization timeline as part of their investment thesis. I think they need to instead look at what are the risks. Is the federal government going to stomp out cannabis. And I think that is one of the big changes this year. There was a lot of uncertainty with Jeff Sessions at the Department of Justice and Donald Trump as president. You never know what's going to happen. And I think at least so far at this point, most investors and certainly the operators are pretty comfortable that status quo is going to prevail. And I think status quo is a really good thing. And the last thing I want to do is rain on Canada, because Canada's just been awesome. And the Canadian LPs have the whole world in which they can operate. And the United States companies don't have that opportunity for the most part. Take a country like Germany, they specifically said if you don't have federal legal experience, then you can't participate. So Canada has a lot of global opportunities, and those opportunities are great. But in the United States, it's a great market. We have a better product set. We have better, more experience, I would say. The oldest legal Canadian companies are 5 or 6 years old. So here in the United States, we have companies with roots back to California, 20 years ago, and they've been dealing with very tough markets for a long time. And it's not just in California; there's other states as well, and there's some new companies. But the point being, the opportunity set in the United States is a little bit different. It's a larger market with more products. We're watching Canada right now struggle with legalization. There's very few dispensaries that are open, or retail stores, let's call them, and it's going to be slow to roll out. Here where you guys sit right now in Ontario, there's not a single store, which is crazy. In the United States, we have a lot of retail points of distribution. They've been around for a long time, and they're there for some of these multi-state operators to acquire. We've seen MedMen, for instance, go into Arizona and Illinois and pick up some really fine operators from what I've been able to observe. We'll see if that strategy works out for them, but that's been their approach. So I think cannabis investors have a real opportunity in the United States. It's not the expense of Canadian LPs. It's just a different opportunity.
I think, Alan, I think it's interesting in a place like California, which obviously was the first in '96 to get the ball rolling, that it's that evolution from the underground or gray market to be gentle into the mainstream and tracked, taxed market. And now that the legislation has done its job, now governments led by California and all other sectors or all other jurisdictions will spend their time trying to bring that gray market into the, call it, seed to cash register tracking from point to point to point through the entire harvest and processing and retailing, to bring that in so that the tax revenues can be collected so they actually know what's going on. An estimate I read, and I'm sure the estimates are wild and crazy and unknown, was that only a third of California maybe is in the full tract or above the line kind of activity, and that and if it's 6 or 8 billion, there's another up to 2 times that number that's still yet to come. And what that means is the revenue numbers from a mature market or a leadership market like that can be very, very explosive. And when they show up in publicly traded or investment related type companies, it could be quite a revenue explosion and a tax revenue explosion.
Yeah, that's for sure. Yep.
Okay.
Same thing's going on in Canada right now.
I'm sorry? Sorry, please?
Go ahead.
I was just going to say the same thing's going on in Canada. It's a good point about California being, more illicit than licit right now. It's the gray market is still ruling. Origin House, which used to be Canada Royalty, had a call today, and they really explained very well kind of some of the challenges. We've been hearing this from a lot of companies, even KushCo, which I just mentioned a few minutes ago, where this transition, it's like driving 100 miles an hour and hitting a brick wall. I mean, the cannabis industry in California was fine. The gray market cannabis industry in Canada was just fine. And then you overlay this new legal system, and there's some really rough adjustments. And so, in the short term, there's going to be some pain in Canada and California and all these markets, Michigan pretty soon, where you have a well-established gray market or black market. And I think the good news from an investment perspective is we're going to have years and years of good growth coming out of Canada and California.
I think also when you look at maybe ultra-conservative, and the example I like to use without a lot of knowledge is say a state like Utah, which is a pretty conservative state, next door to a state like Colorado, which was one of the first big ones. In fact, I think the first with full open doors. And if residents of Utah are driving across the border to get their, hit the dispensaries, at some point, these state governments, they just can't stand losing the jobs and losing the tax revenues, and that becomes its own domino effect state by state.
For sure. Utah's a little bit of a stretch, but this is really going on up in Massachusetts, where all of a sudden it's legal, finally, and it's a race right now. New Jersey, New York, Connecticut, they're all heading towards legalization, and it's exactly what you just said. They don't want to see the tax dollars go the other way.
Once they got over the stigma that gambling or lotteries were evil, and they decided that once one state cracked in with state lotteries in the 70s and 80s, then they all piled in and said, well, we're not letting our residents go across border to buy their tickets.
Alan, thanks for phoning in today on the Skype, and always a pleasure to talk to you. We're going to leave it there. We're going to come back to you at some point in the near future. Always a pleasure.
Yep.
Have a great day.
Thank you.
Thank you.
In a minute, we're going to read some of your comments. So send them in on YouTube or the Midas Letter Live page. But first, we know you can consume cannabis, but now you can wear it too. Adamo Barbieri tells us.
The evolution of cannabis-inspired fashion takes us from the days of Cheech and Chong, Jimi Hendrix, and Bob Marley, all the way to where we're at today with glamorous accessories and high fashion looks. Now, I don't really know why I was asked to talk about fashion. I'm still wearing the same jeans from about 12 years ago. But needless to say, I'm still curious to find out about the current cannabis fashion trends. When I say cannabis fashion, what do you think of?
About what?
Cannabis fashion. What do you think of when I say those words?
Cannabis fashion. I think about Bob Marley's style, you know, like Rasta man, and that's it.
I think a little bit rough clothing articles, but sustainable, friendly. They wrinkle easily, apparently.
When I say cannabis and fashion, what comes to mind?
Weed. I don't know, smoking bongs, smoking joints.
So just nothing fashion related?
Nothing really.
I think about weed on my socks, the marijuana leaf on all of my socks that I own.
You have those?
I do.
Do you wear a lot of hemp?
I don't. Not yet. Are you going to tell me about why I should be?
No, I don't know anything. I'm trying to find out too. I'm trying to learn. I'm still not sure if I'm grasping what cannabis fashion truly is. I mean, when I look at the shirts James wears on the show, it makes me feel like I'm high. Is that cannabis fashion? I need an expert's opinion.
Well, cannabis fashion is a really bizarre term, to be honest with you, because I think when people think of cannabis fashion, it's often head shop t-shirts and Bob Marley and stuff like that. And while there is an interest with some of having cannabis iconography on the clothing, that's really not the main way to describe where cannabis and fashion are intersecting. Cannabis and fashion work together in a couple of really interesting ways. I mean, the first way is in a textile kind of way. Hemp is an incredible textile. It needs very little water. It's incredibly resilient. As a fabric itself, it's incredibly durable. It's incredibly soft. The legalization of cannabis is a lifestyle movement, and that is going to infuse every element, be it fashion, decor, home elements, because it is a new trend that is moving through all permeations of how we live and how we dress, because we wear our political values. So a couple of ways we're going to see that is through actual design, particularly with accessories is where we're seeing it right now. Evening bags and clutches that have secret compartments to hold your cannabis accoutrement, things that are zippers that are childproof and waterproof and odorproof. So there will be design that is pushed. The other way that they're working together is through partnerships. And this is kind of a very strategic, very thoughtful, very diligent when these partnerships are made. They're not just done willy-nilly with fashion designers getting all excited to work with, you know, cannabis strains and whatnot. For the cannabis organizations, it's a way to really normalize their product and get all of those marketing benefits of brand awareness, of public relations, of normalizing the product that are going to become more and more and more important. So I think that's where we're going to see the future really moving. It's less about creating a fabric with weed leaves all over it and more about how can these two industries really support each other to mutual benefit, and that's only going to progress. We're just seeing the beginning of it.
For Midas Letter Live, I'm Adamo Barbieri.
And you know, the good thing about wearing hemp is that if you get a little, you know, fidgety, you can always smoke some of your clothes. Anyway, I don't know if that's going to. Some of those fashions are very, very sartorially resplendent. Say that 5 times fast. Okay, so yeah, lots going on in the cannabis space. It's been a big boon to Canada.
I think the spin-out businesses, which is what that fashion side, I mean, that's going to be explosive growth for sure.
Yeah, yeah. Now, Steve, let's talk about some of the money flows that we were talking about earlier that you've got your eye on.
Well, when you see a big rough time in the stock market like we've seen the last 6 weeks, we had talked previously at this desk about where does the money go? Where, I mean, the money, some of it gets disappeared in a loss situation, but most of it's still there. And where does it go? And it's interesting to note that we've had pretty massive liquidation of bonds in the U.S. And although some money's coming back, the bond index. The TLT is one that we look at, and that
I'm going to put up the TLT.
Yeah, that's the ETF, exchange traded fund for the 20-year U.S. bond.
It's up here right now, the TLT.
Now remember, when bond prices, when they, you know, to make sure that when rates are going up, I mean the inverse is happening.
Yeah, bond prices drop, and so this is a reflection as. This goes lower, that means interest rates are going higher.
Yeah, and you're losing capital.
But in the last month, rates have dropped a bit.
Yeah, well, we had a 116 on it back in September when things were bullish.
Right.
And then it went to 112.
Yeah.
And then it rallied back to 116, pulled back to about 114. So that's an indicator of also sentiment in the market, which we talked about. And when people think that rates aren't going to go up as much, then we've got a constructive view on the bond market. So that's noteworthy. But a lot of money came out of bonds. The 4-week average, I looked up in Barron's, the 4-week average on money flows is interesting, and these are net numbers in the U.S. only, but obviously leadership's important. $14 billion net. That's net means gross sales versus redemptions, so net number, you always look at that. Plus 14 billion in the last 4-week average, moving average, so that's 14 billion a week in money market. So that was the number we talked about. When the market's going down, money's going to cash to catch its, kind of slow down its heart rate. So that's obvious. It's a given. Money out of bonds, money out of other sectors go to cash.
Yeah. So
money market
doesn't necessarily go from stocks to bonds.
No.
They both sort of come out together.
Yeah.
And they go to cash.
Yeah. But what's also noteworthy is an equal amount, 14.5 billion, is the average weekly number, the 4-week moving average of money going in on a net basis into U.S. equity mutual funds. And that's interesting. That shows a high level of bullishness still in the stock market when the stock market's been going down, because typically you'd see money fleeing equities. And that suggests that there's still a positive sentiment. That's a mixed bag because the contrarians say you need to be more bearish to have a real turnaround. On the other hand, it means that there are fundamentally still confidence in the economic numbers, confidence in the profitability, and confidence to go long equities through mutual funds. So money came out of bonds, some went to cash, and an equal number has been going into equity stocks, mutual funds. That's a very interesting point, that there's still good stock buyers around.
Well, you know, and interestingly enough, I saw something, a note from Ed Pennock, and I get some of his things, but
I know Eddie.
Yeah, and so he's commenting, and there was another fellow, Kevin Muir, who writes the Macro Tourist, they were saying, and they were talking about Leon Toohey, and Leon Toohey's got an indicator where right now there's so many bears to bulls that he thinks a bottom is in. And today the market exploded. I got this yesterday, and he just, when everybody's bearish, they've already, left. They've already left the building. Or, you know what I mean?
Now I have.
As a contra investor.
I spoke to a friend who follows these things, and he argued that it's the opposite. So, but I know Leon Toohey is one of the grandfathers, one of the statesmen of momentum and technical analysis for decades.
I met him in '78 when I joined Pitfield Mackay Ross, and he always said, "Only buy those stocks that go up. If they don't go up, don't buy them."
No, he was.
I'll never forget that. He was a character. There's no question.
Pitfield ended up being part of Dominion Securities and Royal Bank ultimately. And he did many years there. Solid and great guy.
Well,
but some of the bears are thinking, some of the readings that I saw is that the ratio is still 2 to 1 bulls to bears, and some would argue that it needs to be less than 2 to 1. The number that I saw was 20% are bearish in the U.S. of the survey, 40% are bullish, and 40% are neutral. There's always people on the fence. And that 2 to 1 ratio, for some, says we need a little more bearishness to get to the true bottom. But if Leon likes it, that's very noteworthy because he's got a heck of a long-term track record.
And there's something about longevity in this game, isn't there? If you've been around for a while, you don't have to be the best. You just have to. You just don't want to get annihilated. Anyway, we're going to take a question. We got a question here from Michael Schmidt asking about CVSI. I've been following it. It's on my list. James, I don't think it's in his list, but James isn't here, so we're going to take a look at the chart. I know it's throwing off cash. At least I believe it's throwing off cash. Any company that's throwing off cash is better than a company that isn't throwing off cash. I mean, that's there we go, CV Sciences. And yeah, today we're at, here, I'm going to put up a 3-month chart. Now this is one that's, I think the all-time high is around 630. It's trading at 450. It's up 27% today.
Wow.
Yeah. Maybe we can get that chart up there, control room.
27%.
Yeah. Look at that last candle.
That's a big reversal.
No, exactly. And so what I like to see is we've had a bad cannabis market, and then today the markets are good, starting yesterday. The ones that get the biggest moves are the ones that people really look at. The ones that are marginal in terms of quality, probably not so much attention.
What tends to happen with the less favored ones is you get volume, you get a lot of volume increase, but you get selling into that volume. That's interesting. Some of the big cap cannabis stocks are all up in the 5, 6, 7% range today, which kind of coincides with the fact that the broad big cap stock markets are up about 2%. The Russell 2000 is up about 2%. The Dow was up about 2 when I looked at it last time. And then you get to the higher beta, higher geared stocks like the Nasdaq's up more than the Dow. It's up 2.5 when I last looked. So, and it would stand to reason that the cannabis sector, the leadership would be up 5 or 8%, which would be very typical that when they reverse, you get more upside because you get more volatility on the downside when the market's unfavorable.
Yeah, this company exhibits is exhibiting some good behavior, and I note here that the S&P 500 now is up 60 points, 60. So that's like 2.5%.
Now there's often a rally associated with post Thanksgiving in the U.S. and historically for the last 90 years, December is the strongest month of the year.
Yeah,
they call it a Santa Claus rally.
Sure.
We used to say that Mr. Dressup comes out in the month of December because institutional managers lay off the sell trigger and the buying enhances. And you don't need a lot of buying to make stocks go up. You just need people to stop pounding the bids.
Stop selling.
When the selling slows, you get a little air and you see these things come back. And also there's new optimism. There's a new year coming, so we'll get a new generation of earnings estimates. The GDP numbers are still strong. And again, maybe there's a trade deal coming at the G20, and maybe there's less pressure, upward pressure on rates.
No, you noted earlier that the Dow was up 500. It's now up 614 points.
Wow.
So Steve comes into the co-host chair, and guess what? Markets go ballistic. Everybody's bullish. Okay, regular on our show here, Kempo Consulting. We have a question for Boss Man Steve. I like it. What do you think is or are the best indicators that we have turned the tide in this general bearish market? That's a lot of answers there, a lot of potential answers.
Well, keep an eye on that U.S. mutual fund money flows. I think that when if the cash starts to draw down from the money market, that means that people have calmed down from the sell-offs and that money will be redeployed. Remember, we've spoken before that money can't stay in cash for very long, because there's no return on cash. 25 basis point yield at cash, 50 basis point yield. Once you move it to a money market fund, the fees basically wipe out the returns. In fact, most money markets operated by mutual fund companies are subsidized as a loss leader just to keep that product open, but they hope that their clients and investment advisors will advise their clients to move out of cash into bonds, into stocks, into anything that provides greater expected long-term returns. So when that money market flow starts to low down, that's a key indicator. Another one is to watch the VIX, the volatility index.
Yeah, that must be getting destroyed today.
No, it's not. It was 18.6 when I saw it before, but that won't come down rapidly because VIX is a complicated futures-oriented index, but it is a simplistic measure of risk as the price of buying option volatility insurance, so to speak. So as the VIX goes up, there's a bear sentiment. It costs more to insure your portfolio if you treat it like an insurance premium. And as the VIX goes down, so above 20 is fairly a negative outlook, and in the low teens gets to be more and more bullish. So watching the VIX move, watching that money start to slow, the money market flow slow. It doesn't have to be negative in money market. It just has to go down from that 14 billion, because that means money's getting redeployed into stocks and bonds.
Yeah, interesting. The markets are closed now, and 614 points on the Dow, which I'm sure is a sigh of
giddy up.
Let's get that money back to work.
Giddy up.
Watch those money flows. Okay.
Well, it's almost December. We'll see if a Santa Claus rally comes in. And remember, also, we're losing. We're coming in the next 2 weeks. We'll be at the end of tax loss selling. So this is where Mr. Dressup comes out, and fund managers tend to shed some of maybe too many positions they've accumulated, maybe book some losses. People doing tax management take losses. Some are embarrassment sales. They just wish they don't own them at year end. Others are more like, let's take some prudent losses against capital gains we've taken early in the year because we don't want to have a big net tax bill. That happens for individuals, of course, in Canada, the US, around the world, but also happens for mutual fund managers, because if they book a large gain, then they'll throw that gain on a per capita basis into their unit holders, and the unit holders won't even know they're getting a big tax distribution, taxable distribution, so they won't like that. So there is that pressure on the sell side, and all that selling, people don't wait till December 29th to sell their tax losses. It's done by mid-December.
I would say,
so
you
next
get
2 or 3 weeks,
absolutely,
it's over.
Yeah, and that's a good time to buy some juniors.
There's some bargains.
Okay, now Steve, you probably know that I have the occasional beer, and you've been privy to that in some of our
I'm shocked.
evening sessions. Anyway, so I don't normally drink near beer or beer.
I thought you were going to say I don't normally drink, period.
Yesterday, I had a great meeting with Terry Donnelly, the CEO of Hill Street Beverage Company, and we had a couple of his products here. One was a Pilsner, one was a lager, and I had one of them. And I got to tell you, and he's won 8 awards. We're gonna hear that interview now. It's great. If you ever want a light near beer, if you don't feel like consuming alcohol, I got to tell you, I'm impressed. I'm going to buy this product for my home.
You've heard that line from many people. I only drink on days that end in Y. What's today? Today's Wednesday. It's okay today.
It's always noon somewhere.
An old classic.
No. He's got some really good products, and we're going to hear that interview right now. We have Terry Donnelly. He's the CEO and chairman of Hill Street Beverage Company, ticker BEER.
Beer.
There you go.
Couldn't be better.
Terry.
And thanks for having me.
Nice to have you.
Yeah.
Nice to have you.
Pleasure to be here.
Yeah. So you know what? We've got some products here, and just to let the viewers know, less than 0.5% alcohol.
Yeah.
And I'm very impressed with all the awards on this can of craft brewed lager. And you've been involved with this for quite a while now.
Well, I joined the company about 18 months ago. And the company's been around about 10 years. So I actually joined a company that was a bit of a turnaround situation. They had been producing a private label set of brands for Mothers Against Drunk Driving.
Right.
So they created wine and the beer that you see here, but we have about 18 styles of wine that we have in our catalog.
What's the biggest, is it more wine or is it more beer or is it 50-50?
No, we're probably about 70-30 wine to beer, but beer is obviously the fastest growing for us.
Yeah.
But wine is really what started the business. Our Chardonnay is actually the best-selling product we've got. Followed by our Merlot, and then our Sparkling Brut, which is a champagne-like product. But the product, had a good start when I joined. We were in about 1,200 stores, but the product was called Mad Virgin Drinks, and it was a private label built for Mothers Against Drunk Driving, on the belief that
Mad as in M-A-D-D.
M-A-D-D.
Right.
And it was on the belief that the designated driver had nothing to drink that looked or tasted like wine and beer like everybody else in the party. And so
I'm going to just pop this here because you know what? I'm a bit of a beer drinker.
Great.
And here we go.
Yeah. This is our award-winning craft lager.
No cannabis, no alcohol. Just saying.
Right.
Just saying, everybody.
Exactly. Yeah.
Okay.
So they had produced a really great tasting set of beverages, and I thought, with the right branding and the right approach, this is the perfect platform.
Wow, you know what? That's good beer.
It is a great beer.
It's and gives credence to 1, 2, 3, 4, 5, 6, 7.
Yeah, we've won actually 3 world championships with that product.
Really?
Yeah, up against literally thousands of other competitors in the category.
Have you got some mad scientists in the back somewhere that's got this thing figured out?
We really have a great team. The team that we've assembled.
How many people in your team?
There's about a dozen people on the team, but we have about 100 years of beverage industry experience across those people. So people that really understand and are super passionate about.
That's excellent. That's an excellent drink. I will buy that and I'll drink that.
Yeah, and this is a different product.
Yeah.
This is our Pilsner. So it's a much lighter. I call this the perfect drink for the drive into work.
Yeah.
So it's a light tasting Pilsner. It's perfect for in the boat or sitting on the dock.
Yeah.
But we're in, we've expanded the distribution.
Sitting on the dock of the bay.
Exactly. We've expanded to about 7,000 stores across Canada. So we're in every Loblaws, we're in every Sobeys, every Shoppers Drug Mart, right nationally across the country.
Now, your year ended June 30th.
June 30th.
And for that period, what was your revenue for that period?
So that year was the transition year for us. So that was kind of converting everything from the Mad Virgin Drinks brand.
And you'd been there about a year at that point.
Yeah, so we were just kind of getting going and converting all the brands, convincing the retailers to come along with the program. And so we did about $1.6 million last year in our fiscal year. We had to change distributors.
Sure. And what did you do what did you do the year before that?
The year before we did about $900,000.
Okay, so that's
we even grew the business.
It's almost a double. Almost a double in a transition year.
Exactly. Yeah. Right. And so now this fiscal year we now have new retailers coming on board. We're getting full national distribution with Loblaws and Sobeys.
Right.
We've got our new distributor, a new sales team that's under the leadership of our head of sales, who's just a kick-ass guy. Doug Taylor used to be the head of sales at Microsoft and worked at Coke and Unilever. So
really,
a real strong sales executive. And our new marketing exec, who started in April, used to be at Google. Before that, was at Starbucks and Coca-Cola. So a guy who really understands the beverage space and digital marketing.
Hey, so you got some beer products and you got some wine products. Now, I understand you won some fairly prestigious awards.
Yes.
In California.
Yeah. So our Cabernet Sauvignon actually won a double gold medal at the San Francisco International Wine Challenge.
Your Cabernet Sauvignon.
Our Cabernet Sauvignon.
Alcohol-free.
Alcohol-free, 0% alcohol in all of our wines. That's the first time ever that a non-alcoholic wine has won a double gold medal in the San Francisco competition, which is the equivalent of the World Championship of wine. It's the biggest wine competition in the world. There's almost 5,000 wineries that compete from all over the globe. So
That's impressive. That's impressive.
And a double gold, just so you understand, I mean, the wine tasters taste these products in blind taste testing.
Right.
And if the majority of them pick your product, you get a gold medal. But if they unanimously choose your product in blind test testing, so you have no idea whose wine they're drinking, what label is, we won a double gold for the Cab Sauv. So a unanimous selection against literally, what would be probably hundreds of competitors from around the world.
And what would a bottle of that wine sell for?
I think we sell for $16 a bottle. Most of our products at retail sell for somewhere between $10 to $12 a bottle.
Yeah.
We have a good selection on our website. We're moving into the $15, $16 price range as well.
And these are your products that are going to be infused with cannabis.
Absolutely.
And available to the and when now this won't happen
till October next year.
And you can start. Okay. Yeah. And obviously you're experimenting with that now. And
well, we've licensed the patent portfolio from Lexaria. So their technology allows us to take cannabis, make it an odorless and tasteless powder, which is water soluble, and then it's really fast acting. So you feel it almost instantly, and you get the full onset within about 15 minutes. So you don't get that 2-hour delay that you get from
will you have a beer that has some THC and then one with a CBD?
Absolutely. So we actually see there's 3 big buckets that are an opportunity for beverages. So obviously beer and wine is for that adult social occasion.
Sure.
Right?
Sure.
It's for enhancing your life. You come home from work, you have a beer.
Yeah.
Makes your arrival home a little better. Then you have some wine with dinner. It enhances your meal. So we call it that enhancement moment, right? Then there's the therapeutic bucket, right? Which is I'm looking for pain relief.
Yes.
I'm looking for sport recovery. I'm looking to enhance
for psychological relief.
Exactly. Those kinds of stress reduction. So that what we call a functional beverage is a beverage you drink that has a purpose attached to it. And in the final bucket, which we think holds a lot of promise and it's completely unexplored right now, is actually medicinal products. So we actually think there's an opportunity with Lexaria's technology to actually create prescription beverages that are a much easier way to get a medicinal dose than smoking or a suppository or some kind of horrible tasting oil or a hard to swallow gel cap or pill.
Sure.
And I would say to people, what would you rather have? A lovely rosé or a suppository? I think the choice is pretty clear. Right?
Maybe not for everybody. But anyway.
Exactly.
So I notice, I can't help but notice because when you drink a lot of beer, you're thinking of a bloating feeling.
Yeah, of course. Absolutely.
We're trying to be going into
health conscious. You want to watch your
baby
weight.
boomers or watch
calorie intake.
And I'm looking here and I just see this Weight Watchers approved.
Yes, all of
endorsed.
All of our products are endorsed by Weight Watchers. If you're in the Weight Watchers
70
program,
calories here.
70 calories, which is about a third of the calories of a normal lager.
Of a big one.
Yeah,
that's a tall boy, right?
Yeah, these are about the same. 70 calories a serving. The wine is actually about an 80% reduction. The average calorie count for a serving of wine is 28 calories with us, relative to 150 to 180 for a typical glass of wine.
Yeah. So you've got about 85 million shares. So I do some quick math. You're capped at about 12, 13, 14 million dollars.
Yeah, where I think market cap right now is about 15 million.
Okay, 15 million bucks. You got $2 million in the bank.
Yeah.
You did $1.6 million.
Yeah.
Maybe you can't talk about what you think you're going to do this year.
No.
Okay. Okay, but you are going to come
But
out
we're
with...
very happy with the results.
You got a great tasting product. You're going in the right direction, and you got.
We applied for our license.
I just want to ask you. You're coming out with your June, your first quarter.
Yeah.
Which is going to be out when?
This week.
Okay. Oh yeah. Okay.
This week. Yeah.
Okay.
Yeah. So
we're going to pay attention. But go ahead.
We've applied for our cannabis license with Health Canada. You know, we hope to get that sometime at the end of first quarter, early second quarter of 2019. We hope that'll give us lots of time to be able to formulate, make sure we've got the right dosage levels, make sure we've got the right mix of products, and we're kind of in the final stages of sorting out distribution and being able to ensure that we can address if licensed retailers like an Alcanna or an LCBO, if they will handle beverages, or if beverages will be in liquor stores or beer stores, or if they'll be in dispensaries. So we've got to have a number of options, a number of scenarios that we're planning for to make sure we can address the cannabis marketplace properly.
How many different countries are selling these products right now? Is it all Canadian?
We are just in Canada right now.
Just in Canada.
We're just in Canada.
And any plans to get into the U.S.?
I mean, we'd have to have a much bigger base of business to work from. So we believe the right strategy is to go after the cannabis marketplace. Canada will. We think it's going to be federally legal and distributed across Canada with enough of a base before the American marketplace becomes federally legal, which is the precursor to us entering that marketplace. We're listed on the Toronto Stock on the Venture Exchange.
Yes.
So we can't have operations in the U.S. until it's federally legal in the States. But we think that's an opportunity for us to build scale and to actually really get the team humming and firing on all cylinders before we get into the U.S. market.
Yeah.
I think it took Molson 185 years before they entered the American marketplace. So we'll do it much faster than that.
Terry, is there anything you want to add?
Well, I just hope, it's the perfect season right now for people that are hosting parties to consider having non-alcoholic products as an alternative, especially with people, that now that cannabis is legal, you don't want to be mixing alcohol and cannabis because that kind of sends people off in a direction they may not want to go.
It's a great tasting beer.
Great tasting beer, great tasting wine. Make sure you stock up with a lot of it this Christmas.
Yeah, okay. Well, there you go, folks. The ticker is BEER.
Beer. It's the perfect ticker symbol.
No kidding.
Yeah.
Anyway, great product. Great to have you on the show.
And thanks very much.
Okay.
Pleasure.
Thank you. Well, there you are, folks. All you need to know about a beer that tastes like beer that isn't a beer.
It has no alcohol in it.
No alcohol in it, and they got a great wine product that won a double gold in California for their Cab Sauvignon. Again, no alcohol.
People want quality product. The advantage you pointed out in the interview that the beer product has lower calories. I mean, that's always going to be favorable.
The end of this week, they're coming out with their first quarter, and he obviously couldn't say anything, but he was suggesting that things are moving along in the right direction for Hill Street Brewing.
I was impressed that they're in 7,000 stores.
Yeah.
I mean, that is unbelievable penetration for a company its size.
Only in Canada.
Yeah, that's incredible.
Yeah.
It's just because getting listings as a retail product is a real effort. It takes a lot of work and takes a lot of relationship building to get that shelf space because everybody is trying to get the same exact shelf space. So that's impressive.
For sure. So it's 4:16, Steve. We're going to be here for another 10 minutes or so. So quite an epic day. You come back and you take the markets with you by storm, and all the cash funds are going to be moving back into equities.
Well, that's what we hope, and that's what we expect at some point. But confidence does get traumatized when you have a drop like 500 point down day and 800 points and 2,000 off from peak to trough. And now we recovered a lot of that. So you can't just completely ignore how people feel and what those kind of big red days do. So the beauty is that, the bad news is that when markets sell off, the money comes out really fast because it's panic selling and it's sometimes forced liquidation due to margin calls and repositioning of portfolios. But then the money kind of slowly migrates back in, and that becomes a nice support bid and a nice flow on stocks and on bonds and on equities in general, or mutual funds in general, as the money, because people's confidence gets rebuilt slowly and the money comes back in slowly. So that's what we're hoping to see through December, and I think that's what market indicators are, that maybe Santa Claus is coming to town again in the month of December.
Yeah, we got a question. We got another question here from one of our viewers. 79 Wild wants to know what's up with JWCA, and that's a company that I interviewed with James, the CEO, recently. Maybe
let's have a look at the
I'm going to put up the chart here.
I mean, out of Kitchener, they've got some...
James E. Wagner Cultivation, there we go.
Yeah, they've got some tremendous proprietary technology in growth and cultivation. I think the stock remains a little under-recognized by the markets in general.
Yeah, I don't think there's a big market cap here, is there?
No, and they went public a little bit before the summer, so I think the timing was less than ideal to go public in mid-June, just before the kind of summer quiet period. But they do have tremendous sponsorship. Canopy Rivers is one of the largest shareholders and invested quite a bit of money and obviously provides sponsorship and direction and guidance to the company. So I think that's I think it bodes very well for the future, and stock's probably a decent buy here. But what's going to light it up, the sponsorship is a positive, that Canopy Rivers is there, and who knows if they might ever increase their position. The other side of that, though, keep in mind, is that when you have a strategic relationship in place like that, it can help you operationally, but it can also a little bit remove the possibility that a brand new event of someone can come along, because no other group is likely going to come and challenge Canopy Rivers. So it takes away that possible kind of specialty sizzle on a specific event, but overall I'd say it's a net positive to have that kind of sponsorship, and knowing that if they have capital growth requirements, that they've got a big partner like Canopy Rivers. And it also is a huge endorsement. Canopy Rivers would not have invested in the first place if they didn't like the opportunity for
they've got some unique things going on here.
Yeah,
I recall
they really have some unique growth.
If we can put up the chart just for a moment, I want to make a point here, because I've sort of, there we go. That line's not very straight, but we went public here. I can't remember the price, but we immediately
public,
dropped.
I think at $1.15.
$1.15. So we came down here to this level, and we moved along it, and we had a big rally into the Constellation.
We had that August-September rally, yeah.
And we're back to this, we're almost back to the lows here. So if you're going to step in, I would say now's not a bad time.
It's also important, as you draw that line, Ed, that the current lows that we're seeing are a little higher than the previous.
Higher, yeah.
And you always want to see if you maintain what they call higher lows, because that means you're building a better base, and that ultimately the bias is higher.
Yeah,
from strictly a momentum and technical basis.
Sure. I'm going to quickly go to the Midas Letter website here and just quickly look at some of the there we go, Cannabis, Midas Letter Cannabis Index. So here we go. The Midas Letter Cannabis Canadian Index. Now I don't know if that's the big, I think that's the big one, yeah. I think it's up 8% today. There you go. So 8%, and I'm just trying to get this thing. Here we go. And voila. We can put this. Here we go. So Canopy growth's up almost $3, 7%. Aurora up 8.5%. Afri up 10. Kronos up 6. Hexo's up 5. So, you know, we got green across the board here. It looked pretty ugly yesterday. I was thinking, you know, Afria was very close to going single digit, breaking that getting into that 9 handle range. and also commented about Aurora going below 7.
Yeah,
So,
I mean, they were both almost cut in half. When you think that Aurora was approaching 15 and then got cut down below 8, and then Afria was at 20 and gets cut down to, as you say, almost single digits. So those were 50% retracements. So they've got some work to do. Today's a great. A great bounce, a great recovery, and let's hope that we're building some foundation.
Yeah, let's see what that brings. So big surge in the Dow.
We're also waiting for some other big events, maybe in the cannabis space. We don't have knowledge of it, but why is the Constellation deal with Canopy, which has been 2 rounds, October a year ago, really lit things up? And then really the second deal, the big one, 5 billion Canadian that closed last month, that was announced in August, kind of lit up the market again. Analysts think, they wonder, why is the Constellation Brands the only company in that big global multinational consumer product space that has taken the big step and has linked up with Canada's largest in fact, maybe the globe's largest cannabis company, and other players, maybe not all of the same ingredients that Canopy offers in terms of global footprint and maybe their pioneering advantage, but there are other significant large caps in Canada. Where are those other players? Remember, we heard the rumors in the fall about Coca-Cola. We heard rumors about Altria and Philip Morris.
Tobacco companies,
but I mean, those companies issued public statements saying we don't comment and maybe we're not doing it, and that's what you'd expect them to do. But those were such strong rumors that they actually required announcements and press releases to decline them, or at least to dismiss them at the time. So I think that it's still possibly on the forefront, because when you think of the cannabis space, rarely has there ever been a business evolve where so many mature global footprint companies in different industries could have potential business interest. We talked about that. Beverage companies, beer companies, wine companies, liquor companies, tobacco companies, consumer products, food companies, making crackers and cookies and cakes and prepared snacks, and pharma. And homeopathic wellness companies. All of those potentially have an interest in the cannabis space, and none of them have stepped up. There's some JVs and small things going on, but none of them have stepped up like Constellation.
Did you notice that that South Korea has made some comments about marijuana?
No.
They're looking at making it the medical side of it is going to be South Korea. I mean, geez, what's going on here?
Well, I mean, interesting historically that Asian culture in general, on a macro basis, has been very favorable over centuries and millennia about herbal remedies and those types of things. And so it's interesting if those two worlds mesh and merge.
Yeah. Well, you know what? We got a really big show tomorrow. James West is back, and he's been in California, and I think he's going to be talking to the CFO of Canopy Rivers, so that's coming tomorrow. I think we're going to sign off here, Steve. Thank you very much for coming on the set today, and that's it. So from Midas Letter Live, see you tomorrow.
Good day.